Hey, my name is Carol. This is it's our inaugural live event. I am a tax practitioner, a professional accountant, and a corporate governance specialist on this channel. We discuss tax and accounting matters. We discuss finance. We discuss anything relating to your business, your profits, and how to grow your business. And before I start this live session, I just want to give honor where honor is due and this whole idea to go live began with something that came through my spiritual parents through watching them. So I want to honor them today for the fact that I'm here and you're able to connect and be a part of what we are doing. So if you're benefiting from today, know that it's coming from somewhere. So this is just an intro. I'm waiting for a few people to join us. It is just on 10 o'clock. So I think we're right on time. And maybe before we start, I'm just going to give a brief outline. These sessions are going to be mostly about tax and accounting matters. We're going to discuss bookkeeping. We're going to discuss entrepreneurship. We're going to discuss what it means to make a profit, how to make profits. So, in essence, it's a business coaching session. So, some of the sessions will apply more to those who are in accounting, tax, and bookkeeping roles in their firms, and then some will be more applicable to business owners. I will do my best to simplify the information. I will do my best to make sure that it's information that is available and that it's genuine and that it is valid. Also up to date, because as you know, there are changes constantly happening, especially with our beloved SARS. Any moment, things can change. If you're joining us, welcome to our first inaugural live show. Thank you for joining. Appreciate it. This is our show. And a big shout out to my team, my specific team who work with me day and night, making sure that the clients are getting everything they need on time. So thank you for that. Notando, I see you. Please, could you the stream, like the broadcast? Can you also share the link? And yeah, let's get as many likes as we can. And I think we can get going. I'm seeing the hearts flowing. I'm seeing a like. I'm seeing people that are starting to join. Look, it's our first one. So, I'm expecting the numbers to keep growing. We actually didn't do a lot of marketing for this particular event just yet. We're starting out, but we will start going out and marketing it to all our clients and out there. So hopefully, we will get more people being a part of the broadcast. So if you're just joining us, please like the broadcast, please share the link, and please enjoy. Sit back and relax. I did start off by doing an intro, and what I did say was that we will be discussing many different topics. I will try in advance to give a quick agenda so that you know whether this session is more suitable to you as a business owner or to the bookkeepers and the accountants that are working for certain people. As you know, I cover all sorts of areas: tax, accounting, corporate governance, CIPC, company secretarial, as well as just general business coaching. So I will be going across the board. We also intend to have this as a weekly session. As time goes on, it'll be twice a week. We'll also try and take a survey at the end and see what times are suitable for people, whether we should continue with the 10 a.m. slot or whether we should try and do an evening slot. I think evening slots are suitable for those who are at work and who can't attend, but at the same time, I'm trying to accommodate those who in the evenings are maybe busy with family. Let's get straight into it. So today we're going to do an overall analysis of bookkeeping functions and what it means to run your business. So if you're a business owner, please don't log off. Don't feel like this is going to be technical. We are simply saying we are covering various topics And we're just going to take 45 minutes. So it's not a lot of time from your busy schedule. We are doing headliners today. We're not going into detail. We're not going to be technical, but we will be useful, hopefully. So just to start off, we're going to talk about owning a business, running a business, and what it means. So if you're a business owner, you are aware that your business needs to keep records. You are aware that your business also needs to submit returns to SARS, to the CIPC, and therefore bookkeeping is an essential function in the business. If you're a bookkeeper, an accountant, a tax practitioner in a business, your role is very important because your business or the business that you work for will need your results in order to submit those returns. As we know, SARS is coming very hard at business owners and at those in those positions because they're trying to make sure that there's compliance all around. So it's important that we do our roles efficiently, productively, and correctly, as well as accurately. So the first thing to note is we want to ask ourselves, what is bookkeeping? What's the definition? So I'm just going to give you my own brief definition. It's basically the recording of transactions, and it's usually what we call historical transactions. So transactions that have already occurred, and it could be a year ago, it could be 2 years ago, it could be a month ago. So you are recording those transactions in order to give a result. Therefore, the person that is receiving the information will be able to make decisions based on the bookkeeping that has been done. So, of course, you use certain source documents. We call them source documents in order to do bookkeeping. What do I mean by that? So, you have your bank statements, which in this country, in South Africa, is the main source of documents. And that's what SARS usually prefers to see. So if you have bank statements, you need to be able to see what has gone through the bank. In the old days, we used to use check stubs. I first started this whole journey of mine in accounting and finance way back in the day when people were still writing checks. We would use the check stubs because you would have to write for every check that you're doing, you would have to write the purpose of the check. So we would use the check stubs as our source of entry. We would then reconcile with the bank statement and be able to tell you, okay, so this is how much you have spent on A, B, C, D. And by A, B, C, D, I'm talking about whether you've bought stationery. I'm talking about whether you've paid rent. I'm talking about whether you've bought, raw materials. All those sort of expenses were always recorded. Also, in the old days, it used to be done manually. I'm going somewhere. Please bear with me. We used to record manually, and in the end, we would then reconcile with the bank statement and be able to tell whether the bank balance was correct. Now, however, we have innovated. We are doing bank feeds. That's what I would call real innovation. So if you're using software such as Sage or Xero, or some are even using there's so many different softwares out there. But for SMEs, which is the majority of my audience, the small and medium enterprise businesses, most people use Sage, which is Pastel. You have the cloud version and you also have the desktop version. Those two versions, not exactly the same, but they're similar, as well as Xero. You can actually import your bank feeds. In other words, you would go to the bank and draw the bank statements directly from there and be able to then allocate expenses. So you wouldn't have to manually enter your transactions one by one from the bank statements. However, that in itself has its problems. So people are still doing manual entry of bank statements onto the cash book, processing the cash book, that is, because of the problems involved with the bank feeds. Many times it's because of the format in which you receive the bank statements, which does not integrate very well with the accounting software. So it's just quicker to manually enter those bank statements. Okay. So the other thing is, once your bank statements have been entered in your cash book, you still need to allocate. You still need to know whether those were bank charges, whether that was interest. Because remember, at the end of the day, what you want is to be able to come up with what we call a trial balance and be able to produce financials. So I went all the way back to the bookkeeping function to be able to tell you that that is the source that eventually produces financials. So once your trial balance is done, once you've captured from the bank statement, you've allocated everything correctly, you will then have a trial balance. From your trial balance, you will then be able to do, well, sometimes you do journals, like if there's loans and there's interest on those loans, things like depreciation. Sometimes you're just correcting. Journals would need to be done before your financials are done. Of course, you might also have debtors that you need to bring in. In other words, other clients who you've invoiced who have not paid you, you need to reflect them. And creditors, creditors are suppliers who you haven't paid yet, but you still need to reflect them. There's also issues like inventory. If you're keeping stock, that needs to be included. So in a nutshell, this is the most technical I'm getting today. You need to make sure that all of that has been included in your trial balance before you can do financials. If you do not include everything, your financials will be incorrect. And remember, if you are submitting financials to the bank, for instance, you're trying to get a loan, banks will check, they will confirm that what you've reflected on there is actually accurate. Otherwise, it could be what we call misleading. Remember, they want to know that the company is, number one, solvent. What do I mean by solvent? Solvency means that your assets, fairly valued, exceed your liabilities. In other words, what you own as a business, so in terms of whether it's fixed assets, equipment, stocks, even debtors assets, your bank balance, that must be higher than your debt, your liabilities, what you owe other people. Please remember to like. If you're just joining us, we are dealing with tax accounting issues. We're dealing with issues that hopefully can help you in your business. So we talked about solvency. When banks are trying to ascertain whether to give a loan out, they will look at what your assets are like. They'll look at your liabilities. They'll look at whether you are likely to be able to pay back this loan. So we're calling it a risk assessment. They'll also look at your cash flow. And this is where your cash flow statement comes in, because they need to know what has happened to the cash. You've sold goods, you've provided services, you've invoiced. What happened to the money? And so part of your financials will be your cash flow statement, not your projection, mind you, your statement, which basically tells them in a summary, in a nutshell, this is what has happened with the cash. We have bought assets, we have paid expenses, we have paid sometimes it's salaries, whatever it is you've done. So the banks are interested in risk. They do not want to give out a loan to a client that is high risk, that looks like they won't be able to pay back the loan, and that is not making enough money. So they look at the profit as well. They look at what we call the statement of comprehensive income. Used to be called the profit and loss. They look at that and they want to see that your profit is sufficient for them to be able to deduct their monthly payments for the loan. This is why your financials have to give an accurate reflection and have to give a positive reflection as well. So having talked about what it is that banks want, who else would look at these financials? Well, so all sorts of institutions. For instance, SARS. SARS will need to look at your financials. When you do your financials, remember, you will need to decide whether you've made a profit or not, and that'll also determine whether you're paying tax or not. If you then reflect a profitable position, you will be paying tax. If you reflect a loss, clearly you won't be paying tax. Remember, you're also allowed to carry forward your losses. So if you've made losses in previous years and SARS has actually assessed and approved them for 5 years, those losses can be utilized against future profits. So you will not necessarily be paying profit even though you've made be paying tax even though you've made a profit. So those are the kind of things you need to look out for. Financials will be used, as I said, also by CIPC. most people, when they're submitting the annual returns, they just submit the turnover. You can also submit your financials. That is a complicated route. And for companies that have high turnover, which we call a high PI score, they need to submit their financials to CIPC when they do the annual return. For most of our smaller companies, however, we just pick the turnover. We do not actually submit the financials. So there are many institutions that need your financials, and your financials are based on the bookkeeping that is done at your office. I hope this is all making sense, and I hope this is helping, and I hope this is, productive. If it's helping, please give a thumbs up. Please put a comment. I will respond to your comments thereafter. So, having talked about what bookkeeping is all about, a basic overview, why we need financials, and issues of tax returns, I'm going to talk just a little bit about tax. Most of you are reading you're seeing on social media that SARS is coming down hard on clients regarding tax liabilities and regarding, misrepresentation. Thank you so much to my spiritual mother for responding there. A lot of people are in trouble at the moment because their returns have not accurately reflected the goings on in their businesses. So in other words, they've either over or underestimated their taxes, or in some instances, they've simply undervalued for instance, the turnover or the profit. Remember, SARS has insight, or they have full knowledge of the turnover, the money that has gone into your bank account, your company bank account, even your personal bank account. Therefore, when you submit your return, you should not be submitting a dormant tax return. If you're actually trading, I get a lot of clients that come and say, we didn't make money, we traded, but we didn't make money, so please just submit my income tax return as dormant. No, you cannot do that. Dormant means that you actually did not have transactions going through your bank statements. So it's a different situation if you've had transactions, but you simply haven't made money or you haven't made a profit. Those are two different scenarios. If your company has actually transacted money or not, profit or not, you still need to reflect those proceedings in the form of financials and an income tax return. You cannot say that the company was dormant if there were transactions. So I want to just encourage everyone out there to say, unfortunately, we've gone past the era where SARS ignores fraudulent returns. They call them fraudulent returns now. You then need to make sure, if you have transacted at all, you reflect those transactions on your tax return. Reflecting those transactions on your tax return doesn't mean that you're paying tax. It simply means you are alerting SARS to the fact that, look, I did transact, I just may or may not have made a profit. It's better to actually reflect those transactions than to say you were dormant when you were not. Also, if you're owning an asset in the company, I have companies that are in our portfolio that have property or they have vehicles. Even if they haven't traded, even if they don't have a bank account, you still need to submit a tax return that shows that you had an asset in that company. Why? Because that does not make you dormant. It means you have assets. You are trading, although you're not actually turning over any income. In the same instance, if you have rental income in that property, you also need to reflect that rental income. Now that goes to private, personal tax as well. If you have rental income, please, this is just a sidebar. If you have rental income, you're earning rent on a property in your personal name, please be sure to include that on your tax return. You must include that rental income. Back to the company. So having submitted those tax returns, remember the whole purpose of the tax return is to be able to tell SARS whether you've made a profit or not and whether to pay tax. It's not every company that pays tax on the first cent of profit. There are certain specifications. For instance, if you are a director of only one company, your turnover is less than 10 million, there's a few other specifications. We call you a small business. So you fall under the small business corporation, meaning you won't necessarily be paying tax just because you've made your first year profit in your first year. So don't be afraid to reflect those profits, thinking maybe you will be paying tax. Contact your tax consultant, your tax practitioner, and get advice. Better to know than to find out the hard way. Another thing that's happening at the moment is, besides the income tax, we also want to talk about the VAT, value added tax, VAT, as most people commonly know it. With VAT, in the past, you had to register for VAT if your turnover was R1 million per annum and above. Now, as of April this year, it's now a case of 2.3 million and above. If your turnover hits that mark per annum, then you must register for VAT. But what has happened is a lot of people turnover exceeded R1 million a year. Over the years, they submitted tax returns accordingly, they carried on trading, they did not register for VAT. And unfortunately, SARS is going back now, and they're looking at those clients who exceeded R1 million turnover per annum and who did not register for VAT. And they are doing what we call compulsory registration, even backdating it to when you first exceeded R1 million and expecting you to pay the VAT in those years, which is a big challenge because clearly you wouldn't have registered for VAT 5 years ago, 3 years ago. You didn't charge your clients VAT. Now you're expected to pay that VAT over to SARS that you did not collect. Big problem. So here, what am I saying? I'm saying engage according to the rules with SARS. If you know that your turnover has exceeded R1 million and you're not VAT registered, take that step before they come to you. Register for VAT, get a VAT number, and start charging VAT. Now, what does that mean? That means you're now submitting a VAT return every 2 months. It means you're now having to pay over the VAT. And remember, VAT must be paid on time. Otherwise, you will incur penalties. The other thing that's happening is they're also looking at people's transactions. If they see that you're paying a lot of amounts to individuals or yourself, which look like salary, they're also writing to you and saying, we see you're paying out salaries, but you're not registered as an employer, you're not deducting pay as you earn, therefore we are registering you as an employer and you must start the process of doing pay slips every month. So all around, we see that regulation is catching up with people. We see that non-compliance is catching up with people. Those who have not submitted their income tax returns, whether individuals or company, are getting emails or SMSs and telling them that they've incurred penalties. And a lot of people are in shock because they're wondering, why am I owing SARS? And the reason is, in most cases, it's just a penalty for late submission. And they can go back. They can go back 5 years and say, in those 5 years, you did not submit your tax return, therefore you must pay a penalty. We are getting calls from clients, South Africans who have moved to places like China, New Zealand, Australia. SARS has managed to trace them wherever they are and send them emails or SMSs and say to them, you are owing us a couple of thousand in admin penalty. And guess what? It's not just about paying that penalty. You also need to go back and actually submit those returns in order for the penalty to stop accruing. So what am I saying? Be compliant. If you know that you've never submitted a tax return, you registered a company, but you've never done financials, you've never submitted a tax return, please make sure you do it. Don't wait for them to find you or to come to you. The penalties will be heavy. So here's my suggestion. Make sure you know what your year end is. A lot of companies are registered with the February year end, which is in line with SARS, but some companies are registered with different year ends. It depends on who registered your company. So you need to know what your year end is because your financials need to also align with that year end. You also need to know how many years you've been in operation. Now, a lot of people come to us and they say, well, my company was registered in 2015, but the company didn't do anything, didn't have a bank account, say until 2023. Guess what? From that 2015 to 2023, you still need to file that dormant income tax return. Then, of course, from 2023 onwards, you're now doing actual financials and submitting the actual tax return relevant. So the fact that you only started trading recently does not exempt you from submitting your tax return. You still need to do your dormant tax returns. Because remember, SARS has no way, and this is in quotes, okay, in quotes, they have no way of knowing that you are dormant unless if you tell them. So if you do not tell them you're dormant, the assumption is you are trading and you're just not complying. You're just not submitting your tax return. So remember, compliance is a big thing, whether it's with CIPC or with SARS or with COIDA, which is Workmen's Compensation, Department of Labor, whichever institution in this country requires returns, please do submit on time. And I'm just going to go over a few quick timelines and share them with you so that you have them in your head. The first institution I'm going to talk about and deadlines and timelines is the CIPC. Now, we all know that the annual returns for CIPC must be submitted every year. Every company registered with CIPC, whether you are a PTY, a non-profit company, whether you are a cooperative or an INC, which is your doctors, your lawyers, and so on, accountants as well, or any other company registered with CIPC, you must submit your annual return every year. Now, it's on the anniversary of the date that you registered your company. If you registered your company in July, that means every July you must submit. If you're late, you will be penalized. And of course, if you miss a couple of years, eventually you'll be deregistered from CIPC. The next deadline you need to be aware of is your income tax returns. Now, before we get to income tax return, there's what we call provisional tax, which is called your IRP6. So every company must submit an IRP6, and I'm just going to deal mostly with those companies whose year end is Feb, because that's the majority of companies. If your year end is Feb, which is the end of Feb, it means you submitting your provisional tax returns twice a year, in February and in August, at the end of Feb and at the end of August. Every year, you submit your provisional tax return. What is that? It's basically an estimation of your turnover and your profit. So SARS wants you in advance to estimate and say, this is how much tax I'm expecting to pay, how much profit I'm expecting to make, and therefore you are paying the tax at that point. If you do not submit that provisional tax return, you will be penalized. If you submit and it's completely way out from your actual income tax return, in other words, you submit the provisional tax return to show a loss, and then your income tax return shows a profit, you will be also penalized for understatement of your profit. So you need to be as accurate as possible. If you're paying tax, you pay it at the provisional tax stage. In other words, you're paying ahead. By the time you actually do your financials, you've already paid in advance. And what SARS does is they deduct what you've already paid and say, well, if there's a balance paid, if they owe you, they will refund you. I know it sounds complicated. I will go into greater detail concerning provisional taxes and final taxes at a later stage. For now, I just want to give deadlines. The next deadline I want you to be aware of is the actual income tax return. Now, the tax season opens in July. And for income tax returns of companies, you would be required to start submitting. If your year end is, let's say, Feb 2026, you would then only be required to start submitting your income tax return after July. So we're talking about maybe 5-6 months later. Okay. And of course, they give you a year to submit that return. So your deadline is a year from your actual year end is when you need to submit that return. The other deadline is VAT. Okay, so all the VAT clients, you're either registered under what we call category A or category B. So you're either in the odd period or in the even period. Whatever period or category you're in, your submission has got to be made at least by the 25th and payment made by the 25th. Now, SARS does make an exception for those that are paying via what we call credit push. They are allowed to pay on the last day of the month without incurring a penalty. But everyone else, to be safe, just do it by the 25th. And of course, if the 25th falls on a weekend, then it has to be the Friday, the last working day before the 25th. So that's basically your VAT deadline. Remember, if you are, for instance, reporting Jan and Feb 2022 VAT amounts, it means they will give you up until the 25th of March. So it's in the following month that you're expected to submit the return. Same if it was, let's say, Feb and March of 2026, you would then need to submit in April, by the 25th of April. Okay, that's very simple. The next thing I want to just bring awareness to is the deadline for your payroll, your EMP 201 return and payments. Now that one, SARS does give you a little bit of time. Most people pay salaries anytime between the 25th and the 31st of the month. So they then give you 6 days into the next month, let's say 7 days into the next month, to pay your pay as you earn and UIF over. So whatever you've deducted from your employees, that pay as you earn, that UIF, needs to be paid over in the following month, but within 6 working days. So if those 6 to 7 working days are falling on a weekend, in other words, the 7th is on a weekend, please do it the Friday before. So again, those are payments that need to be made and returns to SARS. Those deductions of pay as you earn, of UIF, need to be done and paid over to SARS. SARS is merciless. If you do not pay those deductions over, you will be penalized from day one. Remember, again, connected to that is the tax certificates or the EMP 541 declaration. Anyone that has employees that is doing pay slips, doing deductions, should be submitting those amounts over monthly and every 6 months doing the recon, the employer recon. Remember though, the only time that you need to give your employees a copy of the tax certificate is the 12-month recon. So that is normally due by end of May in the following year. So remember, the tax year runs from the 1st of March to the 28th of Feb. So you're covering those 12 months in your payroll report. They then give you April to get your act together and May. By the end of May, that report, that recon for the employer, that tax certificate should be done and should be given to your employees. Why? Because they're going to use that to do the auto assessment or the tax return when the tax season opens for personal tax in July. So it's all interconnected. If, as your employer, I give you a tax certificate, you can then be sure that when the tax season opens in July, you are able to see whether you're owing SARS or whether SARS is owing you for tax, or whether it's a 0-0 and no one owes the other. So for all employers out there, big shout out. Please make sure you are compliant in this area. It's not too late. There's still time. You might have missed the deadline, but you can still submit. You will be penalized, however. For all the employees, make sure you get your tax certificate. Make sure you get your IRP6. Make sure your employer that is deducting pay as you earn and UIF is actually giving you the proof that it's being done. Of course, this goes a little bit further. If you have staff, you're deducting pay as you earn, you're deducting UIF. there is a return that needs to be made to the Department of Labor, a UIF return. Now, this has been a subject of much controversy and problem. Most employers are struggling with this one because most people are not able to submit that return. The online portal for UIF has not been working for more than 2 years now. If you're using a payroll package, yes, most people are able to do an online submission to the UIF directly, but it's not a guarantee. So one would need to check and make sure that those payroll records are actually reaching the UIF, because if an employee needs to go on maternity leave, or if they leave, they're retrenched and they want their benefits, they need to be registered at the Department of Labor. They need to know that their returns have been reflected at the Department of Labor. So if your returns are out of date, it could affect any claims that anyone wants to make there. So this is something to bear in mind, to keep in mind, that your returns don't just end with SARS. You also need to make sure the Department of Labor is receiving the return. Now, there is another way of doing coding, which allows you to submit those returns to UIF. It's a bit complicated. You would need to contact them. And if you have not submitted returns, if you have not registered with the Department of Labor, please do it now. Speaking of the Department of Labor, here's one other registration that has caused a lot of panic to people: workmen's compensation. Now, Department of Labor has been going around, they have been checking whether people are registered for workmen's compensation. This is simply insurance with the Department of Labor, so that if someone is injured at work or doing their work, they can be compensated. Now, this is costly because there's a fee that you pay to them every year, and there's a letter of good standing that you get. However, if you are doing tenders and submitting, you will be required to prove that you have a recent letter of good standing. Now, these submission dates are end of April. Every year, the letter of good standing is renewed, and the date of renewal is the 30th of April. I've given you a lot of jargon. I've given you a lot of deadlines. I've given you a lot of dates. I'm sure your brain is swarming with all this information, but I hope it helped. And I hope you'll be able to utilize it all. And I hope you'll be able to make your businesses, your workplaces, places of creativity, productivity, and you'll be able to utilize this information. Now, I'm not about to end just yet. We still have a few more minutes. I want to know, do you have questions? Please, I'm going to give 5 minutes at the end, and then I will allow you to ask questions. I hope I'll be able to answer them live. If not, I will go back. I'll come back and I will answer. This broadcast will continue to be on, and we will post it. If you know someone who works in an accounting environment, if you know someone who's a small business owner who needs to know what they need to be doing, please do share this link with them. Please do invite them. We will let you know our next broadcast, but at this stage, we are going to try and keep to Thursdays. So next Thursday, we will be on again. We'll be on, I think we'll have an evening session and we'll have a morning session. The morning session will be this 10 o'clock one. The evening session will be at 7 p.m. So please inform anyone that you know. Maybe they're at work and they can't connect. They can join us at 7 p.m. We will have 2 sessions, and the sessions will be essentially the same. The 7 p.m. one will be for those who missed the morning one, who couldn't attend, and of course the 10 o'clock one is for those that can't connect in the evenings. Maybe they are busy with family or whatever it is. So we're going to have the same session, and this particular session will be very specific. I will send the agenda on our channel. I will post it so that you know the topics that we will be discussing beforehand, and see if it connects to you. If it's helpful to you, we will then discuss it. If there's any other topics you'd like to attend in it to me to address, issues that are bugging you, things that you have failed to navigate your way through, where maybe you have debtors or creditors queries, you need to do recons, whatever it is, you need to know about allocations, because that's one thing that's very big, very key. Please do send us on this very channel, engage with us, let us know that these are topics maybe you'd like us to touch on, you'd like us to discuss, things that have always confused you, and we will focus on those areas. I think you can also see our contact detail. In fact, I'll give you my email address. You can email me directly if you have any queries, and we'll be able to tell you. If you have topics that you want us to engage in. So I'm going to give you our email address. And from that email address, I'd like you to get in touch if there's anything that you'd like us to discuss in this session. So the email address is info at, and then it's corporatementors.co.za. I'm going to say that again, info at corporatementors.co.za. And I'll spell corporate mentors. I think I need to just check it myself. Corporate Mentors, CORPOR, corporate, yeah, ATEMENTORS.co.za. So corporate mentors, as you hear it, corporate and then mentor with an S, info at corporatementors.co.za. Please do contact us. We'd love to hear from you. We'd love to hear your comments. Thank you for those of you that are engaging, that are commenting. Remember, on this channel, we discuss tax issues, accounting issues, issues of finance. Please do connect to the very end. Please hit the like button. Please subscribe to our channel. Please share with as many people as you can. We are new on this channel. We're trying to grow, but we're also trying to educate people. We are business coaches essentially, but we are a tax and accounting firm. So we do various sessions with people. We also do the books, we do bookkeeping, we do financials, we do tax returns, anything connected with financials. We register companies. So all your CIPC and SARS matters, please do contact us with any issues that you want resolved or raised. I hope this was useful to you. And if there's anything at all that you'd like to ask, that you'd like us to engage in, please don't forget to send us. I did say info at corporatementors.co.za. We also have a website, and that's www.corporatementors.co.za. You can go on our website. You can find us there. You can send us whatever you would like to ask, or you'd like to know. Engage with us. We'd love to hear from you. But most of all, subscribe and be a part of our community. So today, I think I'm going to end here, and I want to thank every single one of you that has connected to you today. Thank you for your support. Thank you for your attention. You held your attention very well for 43 whole minutes. It's not easy to do. And next week, join us as we go into more interesting and exciting topics. As I said, I will try and send you details of what it is that we'll be discussing beforehand. You can share it with colleagues, share it with your loved ones, and they can connect. Have an exciting and a wonderful day. If there's anything I haven't answered that you've asked down below and I probably just haven't seen, I will go back and I will answer. Enjoy the day and have a good one.